Good evening, everybody. How are you? Well, what a wild week that was. 1 week ago, we had that mini budget, and on Monday morning, in a live stream I did just for estate agents on the Best Agent channel, Monday morning I said this week is going to be Armageddon. But wow, it really, really has kind of been a hell of a week. And I mean, I'm smiling about it. I'm just almost glad that week is over. And yeah, it's just let's sit here and I'm going to just enjoy a cold beer from the Cornish Brewery. Not sponsored by these guys, by the way. It's just one of my favorite beers, and try and unpick what's happened and in a way that is specifically intended to be useful for anyone who's been thinking about moving house or is trying to move house or wants to move house or is in the middle of moving house and doesn't know what to do. Everything I'm saying, even though it may not sound like it, everything I'm saying is intended to help home movers make decisions about what they're going to do next. Hi, everyone. Hi, Daniel Latimer, Virtual Signaling. Hi, guys. And hello, everyone on TikTok. Excuse me while I have a swig of my beer. Such good stuff. Right, let's get into it because there is a lot to unpick. I'm going to start off by saying that with the benefit of hindsight of this week, the biggest reveal, or maybe it's not a surprise to anyone, but we have found out who's really in charge, haven't we? We really have. There's no doubting who's in charge. The money markets are in charge of our government. There's just no question about that, okay? Because this entire fiasco of the last 7 days has been because of the money markets' reaction to the mini budget last week and the government's subsequent panicking about what to do next. And next week, we've got the spectacle of the Tory party conference, which I suspect could be pretty incendiary. I think there could be fireworks. I think there could be protests, actually. Just taking the temperature and the mood of people, there's a lot of very unhappy people. And I've never in my adult life seen such a violent swing in the opinion polls from one party to another. Never I'm 50 years old, right? But so let me recap and unpick. I'll try and keep it really simple because it is complicated. It's super complicated. But if you can kind of piece together an understanding of the whole thing, then it makes it slightly easier to figure out what's going on. Because what nobody knows, including me, nobody knows is what's about to happen next. I think what we have just witnessed in the last 7 days is the opening act of a 3-act drama, and let's go through what happened, and then I'll tell you what I think could happen. I don't know what's going to happen next, but I've got a few options that I think are the likely ones, and what's going to happen if those play out. So 1 week ago, Kwasi Kwarteng stood up in the House of Parliament and delivered his budget, and before he'd finished it, the financial markets were reacting sharply. The pound tumbled against the dollar to an all-time low of at $1.103. It's now back up again. But more importantly, the gilt market fell down. And let's just recap why this was such a drama. What they did, which is astonishing to me, is that there's this thing called the OBR. You may have heard about it in the news, the Office for Budget Responsibility, which was created to be independent of government and to hold government to account on its budget forecasting and to provide independent assessment of budgets and forecasts. And the first snifter that we knew anything weird was going on was when we heard that Kwasi Kwarteng had actually decided, he said to the OBR, he saw apparently their proposed forecast or assessment and went, "No, I'm good. It's all right. We'll just do the budget without that. We'll do the budget without the checks and balance of the OBR and their assessment of the budget." Well, that's never happened before since the OBR was brought into existence, I don't know, 10, 12 years ago, whatever it was. And so people already had raised eyebrows. And then what the budget effectively did was, it's like someone taking out a new credit card, huge new credit card, got a massive credit card with a massive spending limit on it, but with no detailed plan of how they're going to make repayments. And when the markets reacted, what happened is that the interest rate on this credit card that the government's taken out to fund their tax cuts and everything else, the interest rate on that card after they said they were taking it out effectively shot up. Okay, because the gilt market or the bond market's reaction to the government's budget was a fall in gilt prices, which is a rise in gilt yields, which basically means much more expensive government borrowing. And I heard today, I haven't checked it out, I heard today on Radio 4, 20 to 40 billion extra in interest because of what's happened to gilt prices. So the money markets punished the budget severely. And so severely, in fact, that for 3 whole days, Kwasi Kwarteng and Liz Truss vanished into thin air, couldn't be found, no comments. It was astonishing. So that was on the Friday, right? On the Monday, the Bank of England, which is responsible for setting interest rates, which is what affects mortgages and homeowners the most, right? The Bank of England issues a statement saying, don't worry, we're going to be making sure that we keep inflation down because, of course, when the pound fell against the dollar, that makes inflation worse. And so that is going to make interest rates worse. And the bank came out and confirmed that and said, we will do whatever we have to do with interest rates to keep inflation down. Okay? Meaning they're going to have to go up further and faster. That's the implication of what they're saying, which is bad news for mortgage markets. But this statement failed to calm and reassure the markets. Okay? Now, that was, I think, Monday. And the market volatility and gilt prices continue to fall. And when gilts fall, the cost of borrowing goes up, or the cost of the government's credit card goes up. And this, by the way, was taking out a credit card not to invest in building something or creating something, but effectively to pay ongoing running costs. You know, it's like taking out a credit card to pay household bills. It's kind of what they've done with the energy bailout and that kind of stuff. So on Tuesday, the gilt prices were falling so sharply that it triggered the equivalent of what's called a margin call for our pension funds. What? Pension funds? What have pension funds got to do with it? Well, our pension funds are the things that invest all of our pension investments for us, and they pension funds invest in all of the markets, and they have complicated investments and hedges to make sure that it's safe, etc. And one of the things that anyone investing in these markets has to do is provide effectively. It's called a margin, and it's to cover any likely losses. And they literally have to provide cash in their margin account to cover any losses. And because the price of gilts fell so far, it meant that the pension funds' margins to cover losses were not big enough. And so the exchanges said, sorry, guys, you're going to need to cough up. So the pension funds turned around to the Bank of England and said, look, if you don't intervene to stop the gilt prices falling, we're going to have to sell our long gilts, which is going to make the downward pressure even worse. And so this, for me, was one of the biggest events of the week. The Bank of England carries out, and there's no other word for it, an emergency intervention in the gilt market. And I think it was 65 billion. I'm not sure if it's 65 billion in one day or 65 billion, because they said it's temporary. The Bank of England's emergency intervention into the gilt market is going to end on the 14th of October, if I've got my facts correct. Now, I was listening to lots of reaction to that. And one of the lines I heard before, I think, was the Canadian guy who's the former Bank of England governor, Mark Carney, that the financial stability of the entire market, of the pension fund market, was at stake. And my reading of it was that the speed of that intervention and the fact that it was a complete U-turn on the Bank of England's stated policy of quantitative tightening or unprinting of money means that we were this is just me speculating, but I think we were perilously close to a absolute spiral crash of the gilt and pension funds. I mean, we came very, very close to a crash that would have caused contagion around world markets. Okay, so the Bank of England stepped in and sorted that out. Now, one of the other things that happened, I mean, there's so much happening this week, okay, and we still haven't heard from eventually Liz Truss and Kwasi Kwarteng came out and just basically spoke as if nothing had happened. Neither of them even acknowledged that any of this had happened. It was like, la, 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 we don't want to hear about it. No, we're sticking to our guns. We're on a good plan. We're energy bailouts. And they just point blank refused to even acknowledge what was going on, which for me was the most worrying sign of all. Where do we get to? So all of this time, what these events meant for the Bank of England is that how fast and how far interest rates are going to rise suddenly became unpredictable. And that is what caused the mortgage companies to start clearing the shelves of their mortgage products. Okay. And according to Money Facts, and I've linked in the YouTube description of this live stream, I've linked to this article. Go read it for yourselves. 41% of mortgage products by the end of the week, compared to what was a week ago on Friday, it was 3,000 something. It's down 40% from that. And we were already down 25% from December. There'll be a gradual reduction in mortgage products since December, right? Gradually going, oh, let's just step back a bit. So that's effectively like a rolling roadblock on the motorway of first-time buyers, right? When it's mostly the first-time buyer products that have been pulled, okay? Because they're still lending to people who've got large deposits and smaller loan to values and that kind of stuff. So we're not saying that the mortgage market has just stopped completely, but the access to first-time buyer borrowing has not only shrunk in terms of how many products are available, but also become rapidly more expensive for the products that are left in just the space of a week. I mean, this is unheard of. This has never happened before, as far as anybody knows. And herein lies the problem for the housing market, right? The mortgage lenders, I mean, the only products they have now announced have got crazy high rates, 5.5%, 6%, 7%. If it's a buy-to-let, you're talking 10% mortgage, some of the figures that I've heard this week, right? And these are sort of panic rates, right? They're like, well, if anyone's that desperate to buy, they want to borrow at those rates, well, then we'll lend to them at those rates. But of course, that suddenly radically changes the affordability for first-time buyers. So we've got this scenario where, and this is a generalization, but the first-time buyer market is now under the influence of a rolling roadblock. It has not stopped completely, but it has slowed right down. And what that means is all of the sellers who are currently relying on first-time buyers to buy their houses now can't sell. Okay? Or if they want to sell, they're going to have to drop their price fast. And that's already been happening based on what I'm hearing. So this is going to increase the speed of house price falls, in my opinion. Okay. Now, the other thing it's going to do is it's going to drastically reduce the number of transactions happening, and that is a threat to estate agents and mortgage brokers. Of course, the mortgage broker industry is a very big industry. They've had a shocking week, right? From what I can see, mortgage brokers have had a more shocking week than estate agents have had. Okay, it's been an absolute nightmare of a week for mortgage brokers. Now, despite everything that I've just described, the general public messaging from mortgage brokers and estate agents was, it's okay, don't worry, it's just a blip, everything's going to be fine. It's just a blip, everything's going to be fine. And I can sense going, really? It's going to be fine? We don't really know why, but we don't believe you. We just don't believe you. It just doesn't sound fine. It doesn't feel fine. There's panic in government. There's panic in the money markets. There's panic in the mortgage markets. And you're telling us everything's going to be fine. Come on, guys. It doesn't sound like it's believable. And so confidence has been trashed. The confidence of movers has been trashed by the sugarcoating carried out by a lot, but not all, mortgage brokers and estate agents. But the mortgage brokers and estate agents who are being more honest are being poo-poo, and myself as well, calling out what I think is going to happen, have been called out as doommongers and doomsayers and talking the market down and all that kind of stuff. We didn't talk the market down. This is what the Chancellor did this all on his own. Okay, well, with Liz Truss's help, I think he did it all on his own. It's nothing to do with me or anyone else talking the market down. I wish I had enough influence to talk the market down. Wouldn't that be cool? So where does that leave us? Well, today, remember at the beginning I said that normally with a budget, you have this thing called an OBR assessment that goes along with it. And it's designed to stop the government fiddling with the figures. It's designed to keep them honest and straight and true. And the government's announcement during the week is, don't worry, on November the 23rd, like, how far away is November the 23rd? On November the 23rd, we will provide an up-to-date forecast and explain exactly how we're going to fund these tax cuts. And quite understandably, the money markets have gone, I'm sorry, that's just too far away. That's like 6-7 weeks away. No, it's just too far. Forget it. You cannot wait that long. We want it now. And that is why today, senior members from the Office of Budget Responsibility went to Downing Street and sat down and talked. Now, nobody knows what was said, okay? But the vibe from the guys coming out was that nothing was said. And in fact, I've got one little thing I'm going to share with you here on the screen to show you. Truss's meeting with OBR ends with no sign of policy U-turn. Government faced intense criticism for avoiding OBR scrutiny, and Truss held talks with fiscal watchdog amid tax cuts fallout. All right, so that's today. So here we are on Friday, and effectively what they're doing is still reacting to what happened during the week, but there's no news. Nothing has happened since, from the government's point of view, there's no actual news since a week ago when the government announced all this is happening. There are now, okay, so one of the things I think you have to is a sign of worry is when members of the government's own party start banging their fists on the table and going, this isn't good enough. This is not good enough. Either the Chancellor needs to go, because look at what's happened in the opinion polls. And there are a lot of Tory MPs going, this is the end of our party. This is just the end of our party. This is the end of the next election. And they are panicking and wanting to do something about it. And so when you see a party's own MPs reacting like they're reacting, that's when you know something really is bad. Now, I've described this almost with a sense of cheeriness in my voice, but in fact, there's nothing cheerful about it. It is arguably the greatest or deepest level of uncertainty that the people of this country have faced since, I don't know, the poll tax, when they tried to bring that in. And the difference being is that we have a leader now who appears to be built on sand, if you know what I mean. She's just sticking to her guns, she's sticking to the playbook, and is not inspiring confidence anywhere. And when you are a population of homeowners, renters, people working in jobs, looking about how secure your job's going to be, you expect these guys to do their job properly. And I think that the biggest problem, the number one uncertainty right now, which is not really being talked about, is that whatever happens with their announcements in the budget and tax and that kind of stuff, I think we are facing, as of next week, you're going to see potentially one of the ways this plays out is a political fallout, a political crisis where we end up with a political uncertainty about the leaders of the party and infighting. And that political uncertainty will only make this situation worse before it gets better if that happens. Now, yes, at some point, things will settle down and mortgages will come back onto the shelves. Who knows at what price? That'll depend on lots of things. Eventually, the housing market will resume its activity in whatever the new normal is going to be. What we don't know at the moment is how long that's going to take and how much damage is going to be done in the meantime to people's moves, to estate agency businesses, to mortgage broking businesses, and to confidence overall. And my concern and why I'm so worried for the country is the absolute lack of any sense of strong direction from the leadership. Now they're trying to, they're saying it, but it reminds me of Theresa May in her strong and stable leadership campaign that she had, which was just anything but, wasn't it? They're sticking to their guns, but actually, I just don't see any real confidence. It looks really shaky. And the one thing that could make this financial turmoil worse is if it then gets added to with political turmoil. All right. So, where does that leave us? And what happens now? I don't really know. But these are the possibilities that I can see of what happens next. Okay. They pull this is, let's do best, medium, and worst case scenario. Best case scenario, in the next 7 days, and by this time next week, I mean, it needs to happen. So by the end of the Tory party conference, something needs to have been done to calm the markets and calm the political uncertainty. And if that can be achieved, right, and I don't mean attempts to calm it, I mean actually calm it, actually do something that makes the markets go, okay, we're okay now. We have some confidence of what's happening, and we can now get on with our job of setting rates. And the Bank of England get on its job, right? I reckon we've got 7 days for that stability and calm to be restored. And if it's not restored by then the next either or is, do we keep the political leaders we've got now, or does their party decide that actually they want to change them? Now, if they keep the ones we've got now, but they haven't achieved political stability, then you are not going to see any improvement in the mortgage market or the financial market. Okay, all right, Daniel. Listen, when I set out these 3 potential scenarios, I will share with you what I think is my best guess of what's going to happen, or what needs to happen, or what's going to happen. Okay. But yeah, so best case scenario, they settle and calm the markets within the next 7 days. Second best case scenario is that they don't settle the markets in the next 7 days, but they do achieve some kind of political stability and somehow hold on and make people think that they're going to see this through and deliver the reassurance that the markets need, which at best is going to be sort of mediocre reassurance and some kind of stability. And so the mediocre or the middle case scenario, we've had the best, which is stability in 7 days. The middle case scenario is it takes a month and we kind of get slightly better stability, and we're going to get a few more mortgage products coming back on, and it's just going to be a bit still not as volatile and uncertain, but still quite volatile and uncertain. And the worst case scenario, and I'm talking about the short term here, I'm not talking about my medium and long term, this is short term, worst case, is that the Tory party decides they need an immediate change of leader. Because even if that results in a new leader who does bring about stability, the amount of time that it takes, and like I said, in the meantime, damage is being done to the housing market and the mortgage market. I still think that's going to be the worst case scenario. Okay, if the Tories decide that they do want to change their leader soon. Okay, who knows? So one of the ideas, actually, I asked my partner on me today, and she said, "I said, what would you do if you were Liz Truss?" And she went, "I would just say, sorry guys, this is much harder than I thought, and I can't do it. I'm going to resign." I mean, that has happened. Again, I'm laughing, but it's almost sort of tragedy laughing, tragic comedy. It's not actually funny. So those are the 3 short-term scenarios. And what we in the house moving market need is a return to stability, whatever the interest rates are, because I know everyone wants to know what interest rates are, and I'm going to come on to that in a minute, so that at least interest rates can stabilize. And if they stabilize, then the mortgage markets will be able to put their products back on the shelf. Lots of questions coming through, and I will look at the questions when I get to the end of this. I also want to comment on the confusion over whether products are being pulled, or mortgages in principle are being pulled, or mortgage offers are being pulled. I want to come on to that a bit later on as well, because there's a lot of confusion around that. And I'm still confused about that. So, what do I think is going to happen? I don't know. I haven't got a confident prediction, but I fear that what is going to happen is a rapid coup during next week's Tory party conference. It's just going to be absolute chaos, and they're going to use it when they're all together to quickly sort out whatever they want to change about the party, because I don't see how they can carry on. I think if the Tory party chooses to carry on without changing their leadership, it's the end. And that's why I don't think that it's the end of the Tory party for now. If they carry on like this, it's just going to be, because honestly, impartially and objectively looking at the competence of the leadership there, I mean, yes, they've inherited a very, very difficult situation, but then the very first thing they've done is make it more. I mean, I don't know. What would you do? What would you do if you were in the Tory party and you're thinking to yourself, how do we fix this crisis? I mean, make no mistake, this is the deepest crisis the Tory party has seen since they wanted to oust Maggie Thatcher, I reckon. Certainly, it's a bigger crisis than when David Cameron resigned and they had to choose a new leader. It's much bigger than that. So, if that's a very good point, Fufta. So, at the moment, the rules are that a new prime minister is immune from being replaced for a year. But actually, I understand that the 1922 committee, which is the one that make the rules, they can change those rules if they want. So where does that leave us? This is why my current prediction about when stability will return to the market is January. Okay, because I cannot see this getting resolved any faster than that. I can't see it being resolved any faster than that. Now, I would be the happiest of all if I'm wrong about that. And if they do manage to resolve it really quickly in 7 days, and it brings back enough stability for the Bank of England to sound like they're in control again, and mortgage companies to start putting mortgage products back on the shelves again, well, then we're still going to have interest rates. And of course, when interest rates change as rapidly as they do now, let's just talk about interest rates for a second. They are changing. They've already changed. They've changed massively in the last week, and they are likely to keep changing. Currently, the Bank of England base rate is forecast to climb to 6% at some point next year. That's the worst case forecast, which would put mortgage products around 8% next year. Okay, and I know everyone that's got a mortgage or got a mortgage coming to an end, or thinking of buying, or thinking of selling and buying somewhere else. There are a million questions, and this isn't the video. I'm going to go into those, but I think at the moment it depends what happens in the next week. But I think the Bank of England is probably going to have to step in sooner than it wanted, and it's probably going to have to raise rates by 1%. I'm not. I mean, I'm only like 60% confident of that prediction. And I think they might have to raise rates even if the market stability isn't improved. And I think there's so much unpredictability in how the markets treat this. And by the way, external factors, right? This hurricane that's just hit Florida and is hitting South Carolina, it's such a massive hurricane. It's the kind of thing that can also be one of those black swan events that also triggers other financial crises elsewhere. And of course, what's happened today in Russia is not helping anything either. Vladimir Putin has drawn new lines on the map and going, right, that's all mine now, that's all Russia's. And if anyone comes near it, I'm going to nuke you. You know, it's and the Nord Stream pipeline being blown up. It's none of it's looking any better. Nothing at the moment is improving. And actually, I learned something today from one of my commenters on YouTube, who actually pointed out that the impact of the Ukraine-Russia war on wheat prices has not been fully felt yet. It won't be felt until next year, and it's going to be inflationary. Now, I haven't looked into that myself, but the way it was explained to me, it made sense. I thought, my God, that's true. So We've got inflation. We've got rising interest rates. We've got market turmoil. We've got rising interest rates for the government to borrow. We've got political uncertainty. We have got, I honestly think that history will look back on this week as the beginning of whatever unfolds is going to be, nothing's going to be the same again, guys. That's for sure. Hence the title of the video on the screen, Everything Just Changed and What Now for the Housing Market. Okay. Let's take some questions. And tonight I'm going to start with the TikTok ones. Have I got any questions here, guys? Not personal questions, just sort of general ones. Is it a good time to go for the mortgage if your interest rate is fixed? Depending on the rate, yes. General advice for most common questions. If you've got a mortgage, if you're one of the lucky people that's currently got a mortgage that you're just about to agree, and you've got a choice of 2 or 5 years, go for 5 years. If you are in a transaction and you're the buyer and you're worried about the transaction because you're worried that now you're overpaying because prices are falling or something else, in a nutshell, my advice is this. Only buy if, despite all of this, you still feel excited and confident about it. If you're feeling like you've got doubts, then my saying is, if in doubt, pull out. If in doubt, pull out. Pretty good mantra in life generally. Sorry, I shouldn't have said that, should I? Now, a comment on the mortgage. I have not yet achieved clarity on exactly which mortgages are being pulled, which mortgage offers are being pulled, okay? Because products are offered, but then actual mortgages are offered and interest rates are quoted, and there are multiple stages of this process. And I think a lot of first-time buyers are under the impression that when they've been told they've got some sort of mortgage in principle, that's a firm mortgage offer, and it isn't. I have heard anecdotal reports of agreed mortgage quotes where they really were actually, hey, here's your mortgage, and it's good. This mortgage offer for you as an individual doesn't expire till this date. I have heard about those being cancelled, but I don't have proof. I can't verify it, but I have had a few people. If anyone watching this could share their experiences, if you've had an experience of a mortgage being retracted when you weren't expecting it, let us know in the comments. That would be really cool. And I'm actually seeking clarity. I'm trying to get hold of a mortgage broker that can actually provide complete clarity and use correct terminology for the different stages of the mortgage application process. Okay, it's a really weird, bizarrely opaque process at the moment. And I think next week, one of the first things I'm going to be looking to do is to get clarity on exactly what the stages of the mortgage application and offer process are, right the way through to the completion of buying the house. And let's name those stages so that we're all talking about the same thing rather than confusing each other with what offers means. Because I'm confused about it, to be honest. Again, any mortgage brokers watching this that would like to sort of put in numbered bullet points and go, number 1, it's mortgage in principle. Number 2 is a decision in principle. Number 3, it's an actual quoted offer. And number 4, is it actually a commitment to lend? At what point does the bank make a theoretically irrevocable commitment to lend? At what point, or I can ask it this way, at what point does the bank become unable to change their mind and back out? Because my feeling is that until the mortgage company has actually transferred the funds into this conveyancer's bank account for completion, they can change their mind. That as far as I'm aware, that's my understanding, but I don't know. Right. How long does a fixed rate offer last? It can be 2 years, 5 years, 10 years, 20 years. In America, they have 30-year mortgages. So there are those are what the different products are. Ian Gray, we've made an application today on a 5-year fix and it's gone to valuation. We'll let you know how it goes. Does that mean that they've gone to value the property? Okay, Nameo's mortgage broker said she couldn't help you this week because she's too busy. Let me see. Okay. So once applied for, the rate is safe. Okay, that makes sense. So but that's still not a commitment to fund. I mean, they can still back out of the funding, couldn't they? They can commit to the rate and be locked into the rate. Will it stabilize by October next year? Okay. Well, we want to hope so, don't we? But even if things have stabilized by next year, that doesn't mean interest rates will be back down. At the moment, the money markets are pricing in interest rates to peak at this time next year. All right. So if you've got a fixed rate mortgage that comes to an end a year from now, this is what I would personally do. It's a judgment call and it's a gamble. You're rolling the dice. There's no guarantee that this is the right thing to do. But for me, if finances are limited, then certainty has a value. And if it was me and my mortgage was coming to an expiry next autumn 2023, I would be looking at exactly what it would cost me to remortgage sooner than that on a 5-year fixed rate and looking at my early redemption costs and just doing the sums and going, right, what's this going to cost me? And is a worthwhile premium to pay to lock in some certainty and to avoid potential 8% interest rates this time next year. Now, Ian, Halifax definitely have pulled products. If you go to the link in the, you're watching on YouTube. So if you go to the link down below in the video to the Money Facts story, go and see what it says in that story, and then I would challenge your mortgage broker, okay? Because that's just not true. It was all over the news that Halifax have released not all, but some of their products. The other number one question I get is, hey, I'm a buyer, should I be buying now or waiting? Generally speaking, if you can wait, I would be waiting till at least January. But if you can afford to buy now and you found the house of your dreams and you're confident you can afford it and you're not overpaying, buy now. Get in before Christmas. How nice would that be? Be in a new home by Christmas with a nice 5-year fixed rate and feel nice and secure where you are for 5 years. By the way, guys, any of you wondering about whether or not you should renegotiate or how to renegotiate, I have done a video on how to renegotiate your purchase price if you want to do it. Is it better to move up north if I'm a remote worker, asks Nick Jones. It depends. That's a personal choice. Better in what way? I mean, you get more for your money up north, that's for sure. But I'd look all over the place. If you know anyone who's a remote worker, the beauty is you can go and live anywhere. So, you will find places that are outside commuting distance of major cities to be much better value. That's brilliant, Vince. With Kamikaze holding the purse, I'm wondering if McDonald's Monopoly tickets might get me a better deal than pounds. Fantastic. Right, let's see. Any more questions on here? My mortgage, so Harrop's back says my mortgage advisor is pressing the send button on the 1st of November when I'm in last 6 months of my fixed rate. Okay, all right, so you're in a fixed rate now and you're going to try and get a new one on the 1st of November. That makes sense. I would be living in Bali if I was a true remote worker, says Zoe B. Deluaro asks, if I wait till January to buy and interest rates are over 6%, would a 2-year deal make more sense than a 5-year deal? Nope. I'd still go 5 years. Because, guys, it's not about the money, it's about the certainty. There's a real value to eliminating some of the uncertainties in your life. John Kay says, great, the Russians are sabotaging the Nord Stream pipeline and the UK government are doing the same for our local estate agents' pipelines. Yeah, that's true. By the way, guys, I had a couple of comments from people saying that they work for estate agents and they're worried for their jobs. Send me private messages. You have every reason and every right to be worried for your jobs, I think. And I think anyone that says don't worry about it, if you are running your own agency, you're in a much stronger position to ride this out if you reset your pipeline. I don't know about land prices. I mean, buying land is always cheaper than buying property, but then you've got to build property on it. I'm not an expert in land prices, though. What else do we have here? Got any questions, guys? Tennis Man says, I got 1.19% 5-year in 2021. Lucky you. That's an amazing result for you. You must be feeling very chuffed with yourself. Someone's heard rumours that the Bank of England will cap our withdrawals like they did in Spain recently. What do I think? I don't think so. I don't think so. I think if there was any truth to that rumour, that would be all over the news very, very quickly. And I don't even know that the Bank of England can cap withdrawals. I don't even think it's something they can do. That's proper scaremongering, I think. You can find my renegotiation video on YouTube. So go to YouTube, Moving Home with Charlie, how to renegotiate. Just Google that and it should come up. But on YouTube, in my videos, you'll find it, how to renegotiate. I'll also put a link to it when this video is saved on YouTube. I'll put a link to the renegotiate video. Any other questions, guys? Wolf Dog says, it feels as if we are heading towards something truly catastrophic. I share that feeling. In the medium to long term, I share that feeling. Yeah, house prices are dropping, and that's why renegotiating is. Just remember, guys, the golden rule of renegotiating is you must accept the chance that your deal might fall apart and you don't get it at all. That happened. Someone who actually watched my video accepted the chance of losing the deal, but decided she would accept that and renegotiate anyway. Renegotiated, and the seller went, right, no, we're not selling to you. We're pulling out from your deal, and we're going to put it back on the market and get our prices somewhere else. Well, there are sellers out there like, sorry, that's a massively foolish attitude. If your buyer tries to renegotiate down and you don't have another offer on hand and you think you're going to put it back on the market and get that price again, that ship sailed, guys, I think. Namio says, I feel like we're experiencing a car crash in slow motion. That is a very, very good. Yeah, I would agree with that. Banks will definitely collapse if house prices drop 30-40%. No, they won't. So I actually have a very close, someone in my extended family who is a very senior investment banker at a very big high street bank in the UK. And I had this discussion with him, and he said, no, this time round, yes, there are lots and lots of problems, and yes, all kinds of things are going to come down, but banks themselves are much, much better insulated against a financial shock than they were before. They've got stronger balance sheets, they've been stress tested, and that they can handle a very big house price crash. That's what he said to me. Now, I can't verify that, but that's, he's someone he's senior at this big bank, and he's someone whose judgment I trust. So I'm personally not worried about banks failing in the UK. Not at the moment. Nothing I've seen yet makes me worry about that. Truth Speaker, could upward pressure from inflation counter against higher interest rates? Upward pressure from inflation actually pushes interest rates higher. Okay, and the reason for that is that the only thing that the Bank of England could do to bring inflation down, which is their sole job, it's their priority job, is to raise interest rates. So if inflation goes higher, interest rates will go higher. It's that simple. I have considered it in my calculation. So I definitely stand by my 30% plus drop today. Yeah. So I think that at the moment, unless the government pulls a rabbit out of the hat and restores total stability in the next 7 days, but I honestly think there's more chance of hell freezing over than that happening. I think that you're going to see best case scenario house price falls are going to be 15%. Worst case scenario house price falls are going to be 50%, probably reaching the bottom in 2024. All right. How do estate agents survive in a housing market crash? That's a good question. Good estate agents survive in a housing crash, and bad estate agents don't. So one of the silver linings from this, because I am a big fan of what estate agents do, I just wish more of them did it honestly. Okay. The reason that there are so few honest estate agents is that being an honest estate agent makes your job harder. Okay, because when you're truthful to people about the value of the house, people go, well, I'm not going to use you because this guy says it's worth much more. So honest estate agents are punished by house sellers because those sellers then go somewhere else. Okay, so that is why, and unfortunately, it's a vicious cycle. But one of the silver linings to the cloud of this happening is that weak and dishonest estate agents get cleared out. Right? They will not stick around, because if your only way of winning business is to overvalue someone's house and lock them into a 3 or 4 month contract, well, you're not going to get away with that this time, because if you do that, you just want people to sell it. I think government will force Bank of England to provide below market finance, because the government can't force Bank of England to do anything at the moment. They'd have to change the law to do that. So the Bank of England is independent from the government, and whilst they talk to each other, the theory is that they can't be told what to do by the government. Okay, that's a good question. Should we all be lowballing a 15 to 20% below asking price offer now? That's a great question. I've had that a lot. Let me answer that question. So, if you're out there offering on property, which I hope you are, because don't stop, keep going, just don't overpay. So, how do you lowball offer? I've got lots of questions going. Look, I want to reduce my offer, but I don't want to offend them. That's such a British thing to do, isn't it? I'm terribly sorry. Would you mind if I didn't overpay for this house? This is how you go about it. This is how I would. I'll tell you the true story of how I bought my first property. It was a lower ground floor, 1-bedroom flat in Brighton. And I had just inherited a little bit of money. I'd inherited £25,000 from my grandfather who died. And the condition was that I wasn't allowed to use it for anything other than buying property. That was it. And I was not in a position to get a mortgage at that point. So I went out looking to buy stuff with my 25 grand. And the closest thing I found was a lower ground floor, a basement 1-bedroom flat in Brighton, near Seven Dials, close to the station, as a rental investment. And it was on the market for £35,000, right? And I only had £25,000. I went and looked at it. It was in a terrible state. And I said to the agent, look, I'd like to buy it because it's ideal for what I'm looking for. But I've got 25. In fact, I said 23 and a half grand because I had to save 1,500 quid for my conveyancing costs and stuff. And I got it. And the way I did it was I said, I'm not being cheeky. I'm not taking the piss. That's literally what I've got. And I understand if they don't want to accept the offer, but there's my offer. And he said, well, I'll go and talk to the client. And they came back and they said, look, would you meet us halfway at 30? And I said, no, you didn't believe me. I actually don't have 30. I've only got this. This is all I've got. So it's that or nothing. And they met me there. Now, I'd looked at quite a few flats before I found that one. I made some other offers and they got rejected. But don't ever worry about offending a seller or offending an estate agent. I mean, yes, you put in a cheeky low offer. It is an estate agent's job to go, yeah, I mean, I can put it to the client, but it's just, that's what they do. That's their job, right? But if you are the only offer in town, I promise you, if the seller is motivated, they will want to hear your offer. They will want to hear it, even if they don't accept it. So now the point is this, though: how far below asking price you make your offer is not the way to look at it. And this is the golden nugget of advice about how to put in a lower offer on the property. Disregard the actual asking price, because depending on which estate agents listed it, it might be stupidly over market value, it might be slightly over market value, or it might be at market value. So you don't look at it as if, oh, well, let's make an offer of X% under market value. This is how you formulate your offer that you want to make. You say you work out to yourself, what is the price at which I am comfortable and happy to buy this property? What is the price above which I'm not comfortable, right? So this is the price that I would, if it was accepted, I would buy the property at this price and be happy to proceed. Okay? Disregard the asking price. Look at what else is out there. Form an opinion on what you think the house price market in that area is going to do, because again, it changes everywhere. Monk 86, can you remind me of that question, because I want to come back to that question. You've got to formulate your own view of the fair price. Don't take the piss. That's just silly. It's just a waste of everyone's time. Don't take the piss. But a fair offer that you would proceed at, so that when you make the offer, you can look the agent in the eye and say, this is the price that we feel is fair given the current circumstances. Maybe we're wrong, and if we're wrong, the seller won't accept our offer, but this is the price we feel fair at. That's the way to do it. Just give your reasons and place your offer. It's as simple as that. Someone said, do I think that agents... I can't scroll back up. Do I think agents would stop showing you other properties if you make a piss take offer? No. Because if you are a genuine buyer with funds, you are much more valuable to them now in the coming house price downturn than you were before, right? So every buyer that's actually making offers, they are going to be crying out for viewings. They're going to be crying out for viewings. So do not be afraid of offering. I mean, think about what you're saying. If you think, oh, I'm shy about offering less, offer what you want to pay to secure the property that you think is a fair price, given all the circumstances and your circumstances. Don't ever be embarrassed about it. Excuse me, got an eyelash in my hand. Make that offer, and actually, I had a story. That's how my grandfather bought a house a long, long time ago. Bought this amazing house. He offered apparently 50% below asking price because it was one of these houses that was a country house and it was wildly overpriced. And he said, it's not worth that, it's worth this. And he was told that he was insulting them, that they were, don't ever come back. And they were so offended. And 6 months later, they came back and said to my grandfather, is that offer still on the table? And they took it, right? So never be shy or ashamed about making a low offer. Don't make a low offer that you haven't thought through. Don't just go, you're asking that, I'm going to take 25% off and ask that. That's not a carefully considered offer, but make a carefully considered offer based on what you think a house is worth and crack on. Right, let's go on with some more questions. Oh, Kempton Town. Yeah, I know Kempton Town. What about prices in London? Now, this isn't my opinion, but based on the information that I've seen, London prices are going to fall the hardest. My opinion is that actually prices in the southwest of England, which have risen because they've risen 20% in the 12 months to July, southwest England house prices rose to 20% in 1 year, or 19.7%. That's a massive spike. Yeah, I think prices in London do warrant it. I mean, I'm the people who are sending me advice or asking me for advice on what to pay for their properties in London, I'm seeing pretty big drops, right? Big drops, from sort of 575 down to 500, 475, 450 kind of thing. What else do we have? Oh my god, I got over 100 new messages on TikTok. Will the bank be able to contain inflation within their estimated timeline? What is their estimated timeline? I don't know what their estimated timeline is. Yeah, okay, looking for questions. That's the first person I've said seeing big drops in Bristol. I had an agent who I know in Bristol saying that it's currently they're leveling, but they're not falling yet. But okay, guys, we're approaching an hour, so I'm going to wrap up with what I would be doing right now if I had any uncertainty about my transaction or my move. I would be waiting for 7 days without doing anything. If I was looking to remortgage, I wouldn't be waiting. I'd be getting my remortgage request in ASAP. If I had a mortgage fixed rate coming to an end within the next 12 months, I'd be getting ready to click the send button on 6 months, which I think is when it can be done, or looking for the early redemption penalty sooner rather than later. How much do I expect prices to drop per quarter from now? It's so very. I mean, I think prices are already 5 to 10% off their highs at the agreed stage. Prices being agreed today are easily 10% off their highs that were a year ago. Okay, 9 months ago, nine months ago. I think that the steepest falls are going to be Q1, Q2 next year. But this will vary a lot depending if the government provides stability in the next week or so. Guys, I'm here for home movers first and foremost. I'm here for home movers. And by the way, if there are any renters watching, I know that I've just been talking about buying at the moment. That's because that's what's really in the news at the moment. I will be doing on renting in due course to try and help the rental market. What have we got here? Anyone else asking questions? Yeah. Oh, okay. Thank you, Vince. I'm going to go watch The Great. I'll see what that is. Guys, please, if you are asking me buy-to-let questions, save your breath, save your typing. I'm here for homeowners. I don't give investment advice. Don't talk about leveraging equity. There are lots of other people that do that. That's not my expertise. I'm here about helping home movers with their decision making. Okay, so I don't do buy-to-let advice. Okay, so I get buy-to-let questions every single day, but that's not what I'm here for. Nope, that's it. Guys, I'm calling it. This has been wonderful. I hope you've enjoyed this. I hope you found it valuable. Welcome to my 1,000 new subscribers in the last week. I sailed past 5,000 subscribers on YouTube, and welcome to my 8,000 new followers on TikTok in the last week. I mean, I have literally been getting about 2,000 new followers and subscribers a day in the last week, and that's just made my mind go. I'm happy. I'm grateful for your feedback. I love it when I get messages sending me stories that my videos have helped you with your move. I love that. Please, please, please keep sending. Follow me on Twitter, moving_Charlie. That's where I do the most sort of up-to-date updates and comments and stuff. Moving_Charlie. Send me private messages there or on Instagram. Thank you very much. Yeah, 5K is great. At this rate, I'm going to be at 10K. If it carries on at the speed, I'll be at 10K within a month. So by the end of October. And your feedback and your positive comments are spurring me on and giving me encouragement and enthusiasm. The last thing I'd like to finish with is, I've had some of you asking me in private messages, how can you tip me or send me support or send me money? I've put a link in. It's at the bottom of the screen there. It's also in the YouTube comments. Honestly, I am totally self-funded, everything I'm doing. I've got no investors or anything. So all support greatly received. Monzo.me/Charles Lambden is where you can send me whatever you want to send me if you want to send me something. Thank you guys. Thank you so much. Have a wonderful weekend. I'm going to drive to a wedding in Wales tomorrow. And I will see you. Let's see what happens over the weekend. Next week's going to be just bananas at the Tory Party conference. Yes, for £10,000, I will burn the cap I wore yesterday. How about that? Have a great one, guys. I will see you very soon. All the best. Have a good one. Good night.